Apple says it's not going to boost iPhone production as 2022 becomes more challenging for the smartphone industry. We've also seen reports that it's going to be lifting wages as well, circa 10%. Dan Ives, Wedbush Securities Managing Director and Senior Equity Research Analyst, joining us now to talk about this. He's got a buy rating and a 200 price target on Apple. Dan, in order to get to 200, and we're around 140 now, do we need to see China unlock? And is China a supply problem for Apple, or is it a demand problem for Apple?
I think it's both right now. I mean, zero COVID's been a dark cloud over Apple. That's the 100% of iPhone production, about 20% of demand. But with that said, I mean, our checks in Asia, and I think even what you're seeing in this report, better than expected. It's holding up well in terms of what Apple sees on the other side of the storm. And I believe the stock is way overly discounting, what I believe is going to be much better news as we go out the next 6-12 months.
Nevertheless, 141. It's hard for overall tech to bottom without Apple. Do you feel that Apple has bottomed here? I get the 6 to 12 months out, you're constructive for sure, but right now, has it bottomed?
Look, I mean, our view is NVIDIA was bottoming, and I think we saw that, this morning, and I believe Apple is basically bottoming. I think right now expectations, our numbers get cut anywhere between 5 to 10%. I think you're baking in a hard landing. You're baking in zero COVID basically continues for the rest of the year. If anything happens that's just a little better than that, which we believe, just given what we see in demand, then I believe that we basically started a bottom here in Apple.
In terms of the margin story, they're raising wages. Other companies are raising wages as well. That seems hard to say right now, Dan. Is there going to be a margin hit here? And given just the profitability, given the top line, is that something they can absorb relatively straightforwardly?
Well, I think they're a unique company that can pass price increases to the consumer with minimal churn. And I think that's what we'll see with iPhones coming out in terms of iPhone 14. But the biggest innovation is the chips. I mean, they right now own their ecosystem. It's given them huge margin lift, enabling them to do things like cost increases, raise wages, make sure they keep developers. And that's why it's that Rock of Gibraltar install base. You got 1 billion iPhones right now. You still have a quarter of them that have not upgraded in 3.5 years. That's why, in our opinion, this continues to be in these types of sell-offs and the chaos. Apple's a gold name to own here.
Hey, Dan, there's a headline that's crossing this. Microsoft's going to slow hiring in Windows, Office, and Teams groups. We've also seen the likes of like Lyft and some of the high-flying tech companies put a hiring freeze or wage freeze on. What do you make of that? Is this just a tech thing? Is this going to spread to other sectors? Like, what's your take?
Well, first of all, a lot of this was planned. I mean, if you look, let's say, Microsoft, I mean, some of those areas, they basically increased by 70, 80% in terms of some pockets of cloud spending. So you'll just see a natural slowdown. Again, many will yell fire in a crowded theater, but if you look ultimately at Microsoft, the cloud story, we're still only a third of the way through in terms of this cloud shift. But these companies are starting to see some of those sort of headwinds. They're slowing hiring to make sure that they do not sort of wait to the game. And I think this is good. It conserves margins, and that's something right now in terms of what the street's baking in. It goes back to expectations. Look at NVIDIA as a good example. I mean, I believe those are signs that we've started to get to some sort of bottoming when it comes to tech.
Dan, how long do we stay down for? That's the bigger question, I think, here. These companies have revalued lower. We probably kind of got too far ahead of us over our skis. We've come down pretty sharply. My question to you is, why did they go back up again?
Well, I think first off, I mean, right now what's baked in, it's a Rubik's Cube macro, right? From zero COVID to horrific situation, Ukraine, inflation, Fed chasing after it. If you start to get numbers in June that are what I believe as we go into earnings season, slightly better than expectations in terms of where they're feared. Sell side brings down numbers, which has happened across the board. Street goes to 2023, and it just comes down to, if we have a mild recession, then tech stocks rip from these levels. I believe you are baking in just Armageddon-like expectations into some of these names. That's why when you have names like NVIDIA that have strong earnings, lower guidance, and you start to see the stock trade up, in my experience, 20 plus years covering these tech stocks through recessions, that's where we start to get to some sort of bombing process.